Good to see you in person, Joanne. Welcome.
Thank you, Sarah. It's great to be here.
So investors like what they heard today. It's also a nice day in the market. What is changing at your company that's not just sort of a healthy luxury consumer? What are you changing in terms of the strategy?
Well, we talked about today was rolling out our future speed, which is what we call our next phase of our growth agenda at Tapestry. And future speed is about getting closer to our consumers and driving innovation and moving with agility and being responsive to change. Because in the environment that we've been in the last 2 years and where we see it going forward, that's how we win. We have three iconic brands that you mentioned, Coach, Kate Spade, and Stuart Weitzman. And we're powering their growth and accelerating their growth with investments that we've made in the Tapestry platform. So our focus is on powering our iconic brands to move at the speed of the consumer.
So what's different about what you were doing before?
We have a maniacal focus on our consumer, and we're leveraging data and analytics across our platform to know our consumer better, and then leveraging a digital platform, which we've also invested in, to meet that consumer where they are. And that consumer, their behaviors are changing. They're more omni-channel, more omni-connected, more digitally connected. Over the last 2 years, we've grown our digital business to scale. Our digital business now is about $2 billion, which is triple where it was pre-pandemic levels. But importantly, on these channels, we're acquiring new customers. We acquired 15 million new customers in the last 2 years because we're better at engaging those customers and meeting them where they are.
Who are those new customers?
Well, they're increasingly younger, which is maybe not a surprise because the younger customer is so digitally engaged, but that customer is increasingly younger, and they're coming to each of our brands in the core categories, so our core handbags and footwear categories, and they're spending at higher than average AUR. So it's a healthy customer that's coming to our brands at high average retails, and they're coming back to our brands with more frequency. So we see this as healthy growth. You know, this new customer acquisition I like to talk about, it's oxygen for our brands. As you bring new customers in, we can acquire them, we can meet them, and we can keep them coming back to our brands.
The AUR you mentioned, which is sort of the industry word for pricing, and you definitely delighted Wall Street today when you said that you weren't going to sacrifice margins for promotions. Is it just because, though, I go back to this, the luxury consumer right now is holding up really well, and you don't really need to get into a promotional environment at this time?
We've increased the number of ways that we can reach our customer, and we know our customer better. And we've pivoted our company fundamentally to be consumer-centric and focus on brand building. And when you focus on brand building and have the capabilities that our platform offers with the digital tools and the information that we understand about our consumer, we can talk to the consumer about the great value we're delivering in our product. We're taking that consumer input and using it to inform our creative process. So we're bringing great and new and innovative product to the market, and we have so many levers to talk about the value of the product that we don't have to rely on price.
Your stock is down double digits this year, along with competitors like Kors and Ralph Lauren. Market's increasingly worried about recession. Do you see any kind of indication of that?
Well, our categories, I'll talk a minute about the categories that we play in. The category handbags, small leather goods, footwear, those categories have proven to be durable over time through downturns, even through COVID, because they fulfill a functional need for consumers, but also they have an emotional connection to these categories. And again, over time, it's proven durable. And even the research that we've fielded recently shows the consumer has a higher intent to spend in the next 12 months. So these categories are very durable, and we have much better capabilities at engaging consumers in these categories. We deliver tremendous value. And if you think about the market overall, European traditional luxury have taken prices up. And our products represent tremendous value in the marketplace. And we see plenty of white space that we can take our prices up. In fact, we've proven pricing power across all of our brands in the last few years, and we expect that to continue.